Hello, hello, hello. Testing, testing, testing. 50 pips, rocking and rolling in a free world. 30th of November, 2016. No trade calls, no recommendations. Everybody responds for their own stuff. And we're here going our 30th of November marathon here. So for everybody who's new in the room, who wasn't in the first one, welcome, welcome, welcome. Again, just my way of paying it forwards, birthday of the blog, so just doing a couple of free sessions. I think here what we'll likely do is, let's see, let me share this. Again, nothing's off the table. Any chart anybody wants to look at, if it's on the platform, we'll look at it. Any question anybody wants to tackle about trading or trading for a living or God knows what, anything's open, just shoot. Nothing's off the table. Use the Q&A. I posted the recording of the earlier session we had in the Q&A, so if anybody missed that, you can have a look at that. And I guess the plan here is we'll do, we did one into London Open. We've done this into early New York flows, and we'll see what happens. I still haven't decided what we do midday, but we can definitely do another session after the OPEC meeting, right? And maybe we could even do one on the New York close. And there might be something in there. I don't know. I'm debating. Maybe I might just do the weekly webinar session here, full live open for everybody, so we can have a full hour there later on around 8:45 Eastern. Let's just see how that moves. Let's see how much we can tackle here. So what's going on? Well, not an awful lot. We still got wheeling and dealing on crude with this OPEC meetings, but you know, our base case here, we discussed in detail this morning how we thought, you know, the correction, the most interesting chart really was to try and look for some kind of correction in euro to the upside. 107's attracting. So let's do a little bit something a little bit different. So we can tackle any chart, but if not, I just wanted to go through on the 1 hour overviews, right? So just to put this into a little bit of context. So euro, what's happening here? So you see, after this attempt to base here and failure, you see that the dips keep on getting bought, right? We tried to base here, and this is all a protection of the 105.00. And in the first session, we is the screen okay, Scott? Okay. Basically here, you know, on this protection of this 105, right, what we said is it looks like, if anywhere, this is a decent place for it to bounce, right? So even if you're looking for some kind of a move back to fill the gap or a bigger move, you see that at these 105s, 50s to, you know, 105.50, oops, into 105.00, what happens, you've got a 50 pip risk for any kind of correction. You know, back to these breakdown zones, you're talking about 100 pips or so. Back into here, you're talking 200 pips or so, right? So that's clearly the play. And what's happening after this has moved down so aggressively, you know, we talked about these 10 negative days in a row. Sooner or later, the more it's going to struggle to get traction here, you know, the more interesting it's going to be for more longs to pile in and for more shorts to try and take their profit, right? Even if that means reshorting higher. And you see all these breakdown zones are so much higher that there's clearly a lot of room to run. Now, it doesn't mean it has to, but that's what it looks like's happening, right? So here, keep in mind, especially if we take out these highs, there's very little edge in trying to stay short euro. You might as well wait for it higher up, okay? That's the big difference here. So Aussie, an awful lot of wheeling and dealing here. Also, we're rolling up against those highs from Monday. Usually, we'll have to see what happens, but with this kind of action, right, these kind of triple tests to the upside, these end up breaking to the upside, right? Even though it may be a labored approach, right? So it doesn't mean it can't go down before going up, but it is fairly rare that these end up being big structural highs or big swing highs. These usually get taken out. So right here, what it looks to me is that we've come into post-holiday week, Wednesday, Tuesday, Monday trade, right? So what's the focus is we've come back on the Monday and we've taken out previous week highs. And now we're struggling. What's so interesting here is not those previous week highs, right? What I would be focused on is either the Friday low or that high range we took out earlier on in the week, right? So look at this as a kind of a base support for the week here or for the rest of the week. And if this area gets taken out, then it's going to be very, very tricky for the longs to get an awful lot of more traction. But as long as buyers still support here, the path of least resistance is likely higher, right? And it's very tricky because you see like market is probing, trying to trigger more selling, but it's holding. And I understand it's a tricky one because you're always tempted to fade, but the problem is there's not an awful lot of edge. And these tight ranges are really tricky to trade because if you get lucky, you get a feeling that you can trade these very, very tight, but you've got a lot of slip risk. There's just not an awful lot of edge. So this is the kind of a classical week where you come in, either you're holding a decent position or it's really tricky to be stubborn unless you're looking for nimble opportunities. It's very tricky to just get into really big, interesting swing, right? And you've got Euro GPB is still pressing higher. And it's very similar to the discussion we had on Euro, right? We're come back here, it's trying to base and it's not attracting aggressive selling. And what it's doing is it's starting to clip stops, right? So here we've taken out weekly highs, right? So most likely, what would you expect? As long as we can hold this break, it'll continue to try and get some traction to the upside, right? If you look at it in terms of a bigger picture here, you've got a lot of room for this to correct. Even if you look, you see how the market tried to keep pressure on, and look how technical this is. Resistance, 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 failed break, back down, previous resistance acting as support. And now it's trying to break higher. So right here, the way you would look at this is that there are a lot of areas for this to hunt if it could get traction to the upside. 1, 2, 3, 4. There's a lot of areas where this could start to take out. So in this kind of slow action through holiday markets, don't be surprised if we retake all the way back up to the upside, and it doesn't necessarily mean that much. Here on any dip lower, any move lower here, let me just that kind of trend line is going to continue to be support. I don't think this is particularly interesting. I'd much rather be playing this through Euro, but it's the same thing playing out across the board, right? So you see Euro's unwind, some shorts are unwinding, Euro GPB shorts are unwinding. Don't forget it's month-end flows, right? What happens on a slow day? Very classical action. You've got Euro CHF trying to get a little move higher. You see, so it's just this Euro unwinding across the board, right? Crude holding, trying to rip higher. That CAD still collateral damage, not an awful lot of interest. Cable suffering from, drive-by shootings or collateral, just collateral damage, not too interesting. And here, market's just really waiting here. What is the market waiting for? Well, market's likely waiting for what's going to happen out of OPEC and what of the New York flows going to do with that ADP, right? But really, it's more about the event risk we have on crude, right? Looking at the charts in terms of a quick overview, right? You see that ES, top left, sorry, let's make this a bit nicer. ES, top left, yesterday's highs, yesterday's highs, yesterday's lows, we're trading inside yesterday's range on ES. We're just waiting, right? Gold moving down one, yesterday's highs, yesterday's lows, we're stuck inside. Yen, yesterday's highs, yesterday's lows, we're inside. Euro trying to break outside. Cable inside yesterday's range. Aussie inside yesterday's range. Kiwis outside, CAD's outside, Euro GBP is outside, Euro JPY is just that Euro, but USD CHF inside, right? So when you're coming into the market early on or going into US flows and you see that pretty much everything is still holding inside yesterday's range, it's still very balanced, right? So it's just that the market is in a holding pattern, the market is in wait and see, and so there's not an awful lot to do. That means that most likely for the people who had an opinion or had a position yesterday, there's very little reason to change their mind, whether it's long or short. So unless we start to break outside those previous day ranges, chances are it's likely going to be an awful lot of chop. And the charts and the ones that are outside of the previous day range, CAD, crude, Euro JPY, Euro GBP, Euro USD, Euro CHF, are likely going to try and extend in that direction. That's the only thing that's going on. Does that make sense? Okay. Any comments, any questions, anything anybody's looking at, anything anybody wants to discuss? Don't be shy. Yeah, I think, in terms of, and let's get back onto the chart, two things which we didn't discuss this morning, which again, it's pretty much the same trade, but I think it's interesting to go through, is essentially, as we said, it's pretty much a dollar move, right? Exactly. So, we talked about this in the Sunday outlook. Have we put in a little top on the dollar index, and are we going to see a shallow correction or a bigger correction, right? And if you look at it on the daily, remember what we discussed on yen, that high is holding. And as long as that high is holding, what do we say? The path of least resistance is for a move back into the 160 range, right? Negative close at new highs. Most likely, market is going to rotate right back down into the previous resistance, which is now going to act as support. So the market is behaving fairly technically here, right? Can even see it on the 1 hour, right? Moving back, bounce, break, tries to hold, gap down, fills the gap, still holding, and it's still trying to correct, right? It's just trying to slowly make its way back into that 160, and that's likely going to be the pivotal level for the week, right? Exactly. A lot of people are going to be talking about, all kinds of patterns here, but especially if this whole holds and we start to close below there, there's room for a bigger correction, right? Into the 99 decent zone. If you look at it on the daily, which is our reference chart, which we're looking with that failure high, you see that these moving averages are starting to come up. So that looks like a decent place if we're going to get a bigger correction. That's the way, that's the way we would be looking at it, okay? Is there going to be a Christmas discount on your foundational webinar series, Stephen? I don't think so. To be honest, I thought about today doing some kind of special deal, right? Since it was the birthday of the blog. But we usually don't do those things. I'll tell you why, right? It's so the philosophy here is I mean, it's an interesting discussion, right? The philosophy here has always been, hey, Merry Christmas to you too, that we started with the weekly outlooks and the foundationals, and the only thing that happens to price is that it goes up as we add more and more stuff, and it's locked in at a cheaper price for the people who started. The discussion about doing deals is I'm really not out to sell new subs. That's number one. And number two, I just think it's not fair for people who paid a different price. That's all, right? So I really wouldn't have hey man, Marty, nice to see you. I wouldn't have a problem with it, but it's just, I don't think it's fair to people who pay the full price. So the service is always the same, so it doesn't change. So it's just a question of being fair to the subscribers. You know, we see the subs as a big family, and we always try and do more. So that's the basic reason, right? But having said that, you've got about, what is it now? 9 or 13 hours. I can't remember how many hours. That's like pretty a lot of stuff. AJ, we did USD JPY in detail, so look at the recording I posted on YouTube. We did it a couple of hours ago, so it hasn't changed. Okay, it's actually, if you look here in the Q&A, you should have the link, you should have the link there. Let me see if I can post it to you, AJ. Did you find it? Can you see it? Okay, cool. By the way, is it AJ with the eagle avatar on Twitter? If it is, massive hello. If it's not, it's even bigger hello. Okay, so AUD NZD, sure. Do you have a specific question on it? Now, I know a lot of people love to look at this pair, right? Kind of like a lot of people like to look at GPB, JPY. We're not huge fans, right? But again, more than happy to look at it. I don't know if you have a specific question on it. I think that, you know, as far as I can remember, the past year or so has been full with people screaming for parity, and most of the time they're getting fairly disappointed, right? At this point, there are a couple of things to keep in mind, right? So if you're just looking at it in terms of the chart, now, I just don't see what kind of edge you have in trying to get aggressively short here. So the only opportunities would tend to be to get long, right? Now, hey, Luca, how's it going? So, but the problem is, you know, what's your risk, right? That's my main issue, because you see, after all these bounces have been capped pretty much in this broader resistance zone. Does that make sense? And right here, what's happening, if you're looking at it to the downside, again, just eyeballing it, this area is being supported, right? So you could easily try and attempt to get long with a tight stop here, but I think really structurally, you know, this is your risk, and you don't even have a 1 to 2 back into that resistance. Do you see what I mean? So as far as we're concerned, this is very, very choppy. It's not expensive enough to sell, and it's not cheap enough to buy, okay? So the other question would be, if you're looking for longs, I think there are much tighter plays and much nicer long setups on AUD USD, right? And if you were trying to get short this, so structurally long Kiwi, I think there was a gift from the gods opportunity to get long Kiwi recently. So we'd always much prefer to trade the majors rather than trade what we would call, an affectionate way, dog against dog kind of chart. So that's it from a bigger term picture. Now here, it's the same thing on the daily, right? You see how you've got all these wicks. So even the stop placement is really tricky, because it's a classical chart where if you try and trade it tight, you're going to get stopped out, and then it's still going to go in your direction. So you know, would I be getting short? No. Gun to my head, would I be looking to get long? Probably. But I just don't think it's cheap enough yet. And I still don't think the area offers particularly interesting risk reward. I just think it's far from interesting. And again, especially for, and I know a lot of people, I'm going to get a lot of flack for this, but I know a lot of the signal services or the forums, they love to get newer traders to trade all this weird pairs like AUDNZD, GPB, JPY, the Orient Express, GPB CAD, AUD CAD, God knows what, right? I think you've got a lot more, you could find the same kind of opportunity on the majors with much better liquidity and much tighter spreads, right? And remember, anybody who tells you, no, you've got to trade these exotic ones because they can move a lot more. Well, keep in mind, they can move a lot more in your favor, but they can also move a lot more against you. The spreads are not as good and the slippage is worse. So I don't, there's no real compelling reason to focus on those. Yeah, that's really our one of our main focuses here is NASDAQ, right? NASDAQ's particularly interesting. As everything's broken, all the other equities have broken up to highs, NASDAQ is still holding. So we still think this is a particularly interesting chart, right? If you look at the way this is trading. And again, apart from the Russell, which you'd have to think it's begging to get sold sooner or later. We'd prefer, if we're trying to get short, we prefer to stick with the weakest one, which is NASDAQ for now. So again, keep in mind that these low liquidity ramps haven't really gotten a lot of traction, and it's all about those highs. So keep an eye on what happens around those 4900s, right? And as long as it can't get traction there, as long as it can't get a daily close above there, we'd still be sellers for repeated tests of 4830s and possibly lower. This is still a big chop range, but our bias or what we're looking for is clearly play this to the downside, not to the upside. Okay. Okay, any comments, any questions, any chart we haven't looked at, any chart, anybody? Yeah, sure. Silver, I can't remember if we talked about it on the Sunday outlook or not, but silver's particularly interesting for us in terms of setting up a possible swing. We've been stuck in this range for an awful lot of time, right? Basically 18, 16, 14. And again, we're still partial to looking for opportunities to get long here. We'd be structurally, from a longer term perspective, we'd be happy with any kind of BE around the 16, looking for this to ultimately try and hold and break back into 20s, 24s, possibly much higher, but we'd consider this as a primary target, right? So it's a tricky one. We'll likely have to see what happens here. There's likely going to be an awful lot of wheeling and dealing. But if we don't start to get weekly or monthly closes below the 14, we still think there's a decent stab that this, there's a decent chance that this is going to try and base, even though it may be labored, right? DAX, what's going on today? Is anybody keeping time? How long have we been going for? I just don't want to make the recording too long. So DAX, what's going on DAX? So let me find the DAX. Okay, so here's the DAX, right? So what we're seeing here is far less interesting trade location for us on DAX than on the U.S. equities, right, James? So again, really much rather be, both if you're looking to get long or short, we'd much rather be trading the U.S. equities. So here what's happening, we're kind of stuck, right? And all things being equal, yesterday, right, the aggressive trade, as we started to probe below this area, had to really be to try and be aggressive and get short on that break to see if you could get the puke, right? And I think that caught a lot of people off guard. Again, we don't trade DAX that aggressively, but here it's almost like it's saved itself, right? Because you see how long those bids been trying to support it, and it finally broke below. So here it looks like it was saved by the bell last minute. But I think here it's still a question of, you know, which way is the cookie going to crumble? I still think there's an awful lot more room to the downside than to the upside. And I think here the tells or the areas to focus on is, you know, are we going to get daily closes back above these highs that keep on being defended even after that cocaine angel ramp post the election? Right? And how long are these lows going to remain defended? I think it's going to take very, very little for the sell pressure to bring it back below and see an aggressive acceleration, whereas I think the move higher could be a little bit more labored. Do you see what I mean? So the question is it going to retest 11,000? Well, unfortunately, we don't have a crystal ball. Now, why are you saying 11,000? Is it just because it's a psychological level or something like that? Or am I missing something? I could be missing something. But here, the way we would look at this, even from a bigger point, to us, 11,000 holds no interest whatsoever, right? Because it's been touched recently. Yeah, it's just not a level that would be interested. Look at it this way in terms of the bigger picture on the weekly, James, right? You see how we're moving, trying to keep the pressure on here in a fairly orderly move down. And this is where it gets a little bit ugly for the bears, right? Does that make sense? So here what's happening is it's trying to reverse. Oh, that's a little smiley face. Look at that. No clown, don't get me in trouble, right? But anyway, so what's happening here? We've broken back up and we're using these previous resistance as support. So right now, we can look at whatever we want to look at, but the key is that this is a massive chop zone, and this is likely what's going to decide it. Does that make sense? So daily, weekly closes above this chop zone likely very bullish, and daily, weekly closes below this, back below the trend line, very heavy. So bullish, we could easily try and take out these highs, try and rip here. Bearish, it's likely going to try and take stabs here. Does that make sense until now? So that's the bigger picture, right? So if we're to break it down on a shorter term picture, this is the key. So we seem to be having some shorter term action around here, but this is the real important range. So as long as it holds, we can take a little bit of a stab higher. But if this breaks, there's a lot of room to the downside. So gun to the head, we still think the asymmetric risk reward is to look for shorts, not for longs, despite the fact that they may not be particularly high odds setup. You know, and that's something you're going to have to deal with throughout your trading journey and discovery, right? There's not only risk versus reward. There's no only average win against average loss, but there's average win, average loss. Doesn't mean much unless it's coupled with percentage win rate. And it's the same thing when you're looking at possible trades, when you're trying to decide whether it makes sense for you. It's not only whether does it have a high or low risk reward, it's what's the percentage, probability of that trade working out, because you know, you might be interested in taking negative risk reward or one-to-one risk rewards that have very high percentage chance of playing out, rather than trading extremely low percentage chance trades that have a slightly higher risk reward. Or you might have a trade that has a gigantic risk reward, and even though the percentage win rate on that strategy may be exceptionally low, it still makes sense because of the huge difference between the risk and reward, right? So those are all considerations you have to deal with, right? Okay, any comments, any questions, any other charts? Okay, I think we've been going for like over 30 minutes. So let's call it let's wrap it up in this one, right? Yeah, I'll post the recording on YouTube, and then we'll do another session later on, either into New York Open, so like in 2-3 hours, or closer to, we'll see. But we'll do another, at least we'll do 2 more half-an-hour sessions. We might do even more. Okay. I'll post the recording, guys. Have an awesome one. Thank you so much, and spending some time with 50, and catch you guys in a bit. Okay.